the various lands upon which we meet around our country today, and to pay our respect to elders past, present and emerging, recognising their ongoing cultures and connections to the lands of this country. Before our broadcast begins, please also be advised that all of the information provided today is general in nature and does not take into consideration your objectives, financial situation or needs. Before making any investment decision, you should always seek independent and licensed advice, which takes into account your specific circumstances.
Good morning. My name is Glenn Cross and I'm the Chair of EZZ Life Science Holdings, ASX ticker EZZ. Our safe harbour statement for noting, EZZ Life Science Holdings is an Australian listed life science company. We develop, manufacture and distribute a range of health supplement, probiotic and functional food products. Our products are all developed in conjunction with key scientific institutions here in Australia and New Zealand. Our products are all manufactured under GMP, Good Manufacturing Practice in Australia, and all of our products are listed and registered with the TGA, the Therapeutic Goods Administration in Australia. We distribute our products in Australia and New Zealand. Our other key market is China, and we are increasing our distribution throughout Southeast Asia, Singapore, Hong Kong, and just recently in Vietnam. This gives you an idea of our key product ranges. We have our EZZ product range, which we manufacture here in Australia and distribute globally. Our three key products by revenue in the first half of FY23 is our NMN capsules, our lysine growth capsules, and our bone growth chews. We are also the exclusive distributor of the Aeron range of products in Australia and New Zealand, and our top products by revenue for the first half of FY23 is our hyaluronic acid collagen face masks, our hyaluronic acid collagen essence, and our instant brightening face masks. We have an extensive range of distribution channels, both bricks and mortar distribution points, as well as an extensive range of e-commerce platforms. Domestically, we have 600 plus distribution points, which include pharmacies, grocery retailers, specialist retailers, and e-commerce platforms within Australia and New Zealand. And you will note from the screen an example of some of our key distribution points. Internationally, we have over 7,500 distribution points, which again includes traditional pharmacies, grocery retailers, and specialist retailers. But increasingly, our key revenue points are through our e-commerce platforms in international markets. Our two key e-commerce platforms are Alibaba's Tmall Global and TikTok, which in China is called Douyin. You will also note some of our other key e-commerce platforms here on the screen. We have a number of recent e-commerce achievements, especially through our e-commerce platforms in China. We have the #1 best-selling nutrition and food products in the last 30 days on Douyin. And as you'll note from this screen, we are also the #1 best-selling products for a number of children's supplements that we distribute through China and Southeast Asia. Just some highlights from our finances for the first half of FY23. These are significant and well worth noting. Our revenue has increased significantly, up 143% from the first half in FY22. Again, our EBITDA and our cash in hand is up significantly from the first half of FY22. Our first half FY23 results were $9.6 million cash on hand, and we have no external debt. Again, our gross margin has increased due to our focus on logistics and purchasing for our manufacturing operations. Our net profit after tax has increased significantly, and for the third time since we IPO'd in early 2019, we have paid a dividend back to our shareholders. We have continued this excellent financial performance into Q3 of FY23. You will note our cash on hand has increased. One of the things that we are looking at present is purchasing or building our own manufacturing facility, and we have been actively seeking a facility for over 12 months now. We're currently looking at several opportunities. Again, our operating cash flow and our revenue has increased again in Q3 of FY23. We are a well-managed company. Our executives understand this market and understand this business in Asia. And our final point is the Financial Review recently listed the fastest growing companies on the ASX. We came in at 41st with a cumulative annual growth rate of 30%. We have continued that growth rate in Q4, and we believe that we can look at significant growth rates into the future. We are a hidden gem on the ASX, and we welcome you in joining us on our journey. Thank you.
Good morning. My name is Arvind Misra, Managing Director of ASX-listed Belararox. Our ticker is BRX. We are a recently listed company, only about 15 months old. We listed last year in January 2022 on the back of a couple of projects in Australia. And our flagship project last year was Belararox project in New South Wales, which is for copper, zinc, lead, gold, and silver, and a project in Western Australia, which is very prospective for gold and lithium. More recently, we have acquired a very prospective project for potentially for large copper gold porphyry systems in Argentina, which I'll talk a bit more about in my presentation. So in terms of location of the project, you will see on this slide on the right-hand side, the project in New South Wales, which is about 3-hour drive from Sydney, northwest. It's in the Lachlan Fold Belt. We inherited this project from previous company, which had about 2.5 million ton with the JORC 2004 code. We have done about 7,000 meters of drilling, RC endowment, and we have now got 5 million ton or at 3.4% zinc equivalent grade, which includes zinc, copper, gold, and silver. And also the other project that we have in Western Australia is Bullabulling project. It's near Coolgardie, which is traditionally been known for large gold mines. But recently there has been a lot of discoveries near our area for lithium, very significant discovery. So we have been looking at lithium prospectivity, and after doing the drone imagery, mapping, and the rock chip samples, we have identified potential for LCT pegmatites on our ground, and we will talk about that. But more importantly, and very significantly, we have this project in Argentina called TMT project, which stands for Toro Molambo and Tombo project. This project we recently acquired from a gentleman called Mr. Jason Ward, who is now director of my company. And he has lived in Argentina for a long time, been credited with a lot of discoveries for copper gold porphyry, including Cascabel in Ecuador with SolGold, which is a large company now. So this project he has assembled over the 20-year period living in Argentina, and he loves this area just because it's in that area where there's bigger players and they are finding bigger copper discoveries and gold discoveries. So immediately south of us is companies like Barrick and Shandong. They have got two producing mines, Pascua-Lama and Veladero. Immediately north to us, about 40 kilometers, there has been a couple of significant findings by London and BHP spending with them on a project called Philadelphia Sol. London is spending $4 billion into developing a project called Josemaria. So it's a very attractive area, ranked number 1 by French Institute of Australia in terms of mining friendliness in the whole Latin America. So that project is world-class in many ways. And we have a very strong board, and the capital structure is very tight. We've only about 64 million shares on issue. So on the board, we have Mr. Neil Warburton, my chairman. I'm managing director. I'm a mining engineer by trade. I came in this country 35 years ago, worked for BHP's MIM, Rios. And after having done many listings, this is my fourth. Very excited about the team, including Jason Ward. He's a legendary geologist. Simon Robertson, a very experienced ASX director and accountant. And John Trekus is our company secretary and he's a lawyer. As you can see on the right-hand side, only 64 million shares on issue. We market cap about $17.5 million, very tightly held. Top 20 shareholders hold about 50% of the business. Just talking about the TMT project, you can see from this screen in the yellow, that's our tenement. And you can see immediately south the two big mines, Veladero and Pascua-Lama, being operated by Barrick and Shandong. Immediately north, you can see the Philadelphia Sol and the London's Josemaria project. And that project, that two bells, the El Indio Gold and the Maricunga Gold, is now closing in that unexplored gap. And this is one of the best real estate you can have in terms of finding the large copper gold porphyry system. You can say from the writing here, Philadelphia Sol intersected 1.3 kilometer long intersection at 1.3% copper equivalent. So it's an area which is very prospective. It's called Elephant Country. Plenty of elephants to be found. Hopefully we found few on our ground. Recently, we commissioned Dr. Steve Garvin, who is a leading copper gold porphyry expert and has been involved with many major companies finding larger copper porphyry systems, particularly in the Andes. And him and Jason Ward did this Sentinel-2 and satellite Lancet surveys, and they have ranked about 11 potential copper porphyry targets in our area. As you can see, A1, A2 targets, which is basically Tambo South and Malombo. And more importantly, on the southern side, where there has been some historical work done at the Tora projects, there are equally prospective copper porphyry targets. Just on my other projects in Bellara, I just want to cover, we've got 643 square kilometer area. The two historical mines, Bellara and Nitivi, which were mined pre-World War, they were mined for very high-grade copper, 3 to 5% copper, and 2 to 4.5 grams gold per ton. And we have done that initial drilling for the project Bellara and Nitivi. Now we are looking at 20 more kilometers of untested, unmapped, and no work done in that corridor, mineralized corridor, which expands 20 kilometers south of Nitivi. And we're hoping that we will find the repeats of Bellara and Nitivi. That work is currently we are doing right now. But on the equally exciting part is on the eastern side, there are some old gold workings like Lang Mine and all, where there has not been much work done. So that area, 643 square kilometer in Lachlan Fold Belt, very prospective for VMS style mineralization for copper, gold, lead, zinc, and silver, but equally also on the eastern side of our tenements, potentially some orogenic gold there, which we are working on right now. In terms of the future prospectivity, we can see this the inverse 1D magnetic survey done at 3D, and it shows the resource boundary line. It clearly shows the ore body remains open and from Bellara north and down plunging south, and equally also prospective on the native B side on the southern side, open down plunge. And you can see from here, few more kilometers, it shows prospectivity. That is where we are busy mapping and doing some initial rock chip sampling also to identify future drilling targets. Now moving to my Bulobuling lithium project, this slide shows that about 350 million tons worth of resource identified and being mined by bigger companies and mines like Mount Holland, Mount Marion, and Bald Hill. And we are right actually 11.5 kilometers from a recent discovery by FBM, 11.5 kilometers from there in the same corridor. And also around us, there's a company called GBM. They have been drilling for pegmatite and lithium pegmatite, and both of them have intersected lithium pegmatites, particularly FBM. They have announced 29 meters at 1.3% lithium. And it looks like that area extends in our ground, also that same mineralized boundaries. And we recently announced some rock chip samples, and we confirmed that we have some lithium and pathfinder material. That was the idea of doing the rock chips. Now we know we got rubidium, we got calcium in our ground. So we'll be doing now next round of work. We'll be doing some soil sampling, and eventually we'll probably do some drilling to hopefully get the similar kind of results that other people are getting in our neighborhood, particularly FBM. So that's about our projects. In terms of some, we are going to be announcing a lot of ASX announcements in the next while. We immediately looking at announcing, conforming our old drilling data at TMT project, conforming them to 2012. And if we are able to conform that to 2012 with the previous drilling done 22 holes at the Tora project in TMT, hopefully we'll be able to estimate a exploration target, which we believe if we are able to do that will be very significant, announce that to the market. And then once the season opens up in Andes in Argentina, which is under ice right now, the season opens in September with the approval of EIAs, which we expect to achieve between now and September. We'll start our field work, and that will lead to a lot of those announcements from the field work. So there will be continuous flow of information from our Argentina project, from our projects in Australia at Belararox. We'll be announcing our rock chip work results and future geophysics work that we are planning to do. And at the Belobling project, quite excitingly, we probably would be announcing our soil sampling in the next few months, and then followed by drilling work and expand from there on. So for the next 6 months to 12 months, we got plenty of announcements, plenty of market updates coming up for our shareholders. Well, thank you very much for this, and I'll leave it for Vivian to ask any questions if you have.
Hello, everybody. My name's Tim Oldham. I'm the CEO and Managing Director of AdAlta Limited, and it's my pleasure to introduce our company to you today. When antibody therapeutics first entered the pharmaceutical armory, they transformed outcomes for many patients because we could deliver unparalleled selectivity and specificity that was not possible with small molecules. Unfortunately, antibodies cannot do everything, and so the search has been on to find smaller format antibody-like molecules that can address the challenges that monoclonal antibodies have not been able to. And this is where AdAlta plays. AdAlta's purpose is to go where antibodies cannot to address debilitating and challenging diseases. Our aim is to produce a high-value pipeline of next-generation protein and cell therapies for diseases where those traditional antibody approaches have been ineffective. Underpinning everything we do is our iBody discovery business. Our iBodies are our core technology that enable us to create these high-value product candidates. iBodies are very small format antibody-like molecules that mimic the structure and shape of molecules found in the shark immune system. These iBodies can be partnered or marketed or sold on their own right, or alternatively, they can be progressed into product development. And our product development business is designed to take those product candidates and develop them through the various stages of risk reduction, through preclinical and clinical development, to produce product candidates that pharmaceutical companies would like to in-license from us or co-develop with us. And we have a portfolio of products in the areas of fibrosis and inflammation and in the field of immuno-oncology. Now, to introduce that portfolio in some more detail, we create shareholder value, we create revenue by creating products that larger pharmaceutical companies wish to acquire from us. Today, our lead program is in the field of fibrosis. This is a degenerative and progressive and often fatal condition involving scarring of internal organs that destroys their normal function. Our lead indication is in the field of lung fibrosis, a disease called idiopathic pulmonary fibrosis, which today has a market in excess of $4.3 billion a year, with 2 drugs that don't work particularly well. The search is on for new molecules. We have this product, 8214, now through phase 1 clinical trials, and we're actively partnering this asset at this point in time. Comparative licensing transactions have commanded in the last 3 to 4 years upfront payments in excess of $45 million and total milestones in excess of $320 million, and in some cases up to $1 billion. $45 million, of course, is several multiples of our current market capitalization. The second field, which I'm really excited about personally, because I think it's a really killer application, if you'll pardon the pun, for our technology, is the field of CAR T-cell therapy. This is revolutionary new technology where we're re-engineering a patient's own immune cells to find cancer. And our iBody technology is critical to being able to deliver these novel cell therapies directly to solid tumors. We need multifunctional CAR T cells that are able to address multiple different tumor targets in order to deliver the same hope that CAR T cell therapy has delivered for blood cancer patients to patients with solid tumors. Comparative licensing transactions for these products at preclinical development, and not even in the clinic, have generated milestones in excess of $10 million up front and total milestones in excess of $300 million. So this field of endeavor is not only an area where the iBody technology is uniquely positioned, it's also something where we can potentially generate returns on our investments in R&D much faster and much earlier at a much lower cost than we can with a traditional therapeutic like 8214. The third area of endeavor we're working on at the moment is a collaboration with GE Healthcare, the world's largest imaging company, to develop novel PET imaging agents to help identify those patients who are responding to the new immuno-oncology drugs or checkpoint inhibitors as early as possible. We want to know if a patient is responding to therapy before their tumor has progressed. And that's the opportunity that we're trying to address with GE Healthcare. The opportunity here with a molecule that's already partnered is to generate royalty revenue in the relatively near future. And by that, I mean several years away rather than 8 to 10 years away. And peak sales from products in this space generate around $400 million a year, on which we will earn a single-digit royalty. So there are 3 examples of concrete products that our iBody technology is able to do. But our iBody platform can also be monetized, if you like, as we collaborate with other pharmaceutical companies to co-discover or to even have fully funded discovery programs. So this platform enables us to generate revenue and generate multiple products over and over again. AdAlta is not a single product company. Our passion and our objective is to create a long-term, ever-evolving pipeline of products. I'd like to spend a little bit of time today talking about our lead asset, 8214, because we've got some really exciting new news that's helped us advance and de-risk this asset significantly. So we've already built a really strong value proposition for this asset. It's a first-in-class molecule, which means it's the first molecule trying to address fibrosis through this particular mode of action. And that's an important competitive advantage for pharmaceutical companies. We've demonstrated preclinical efficacy in multiple animal models of fibrotic diseases, including lung, kidney, and eye fibrosis. We've established our clinical manufacturing processes, and we've successfully completed a phase 1 clinical trial. We have intellectual property protection through 2036 for this molecule, and we already have orphan drug designation granted for pulmonary fibrosis in the US, which confers some significant advantages on our partners once the product comes to market. The next steps are to accelerate our partnering discussions. We're actively engaged with a number of larger pharmaceutical companies around the world to help us progress and finance the phase 2 program for this trial. And meanwhile, we're doing the hard yards to actually prepare this molecule for phase 2 clinical trials. The key next step there is a phase 1 extension study that will help us further extend the safety profile of the molecule and shorten the duration and cost of the phase 2 program. The first patients in that study are expected to be treated, or the first healthy volunteers are expected to be treated in around August 2023. Now that brings me on to the most recent news for our company, and this is really, really important. So up until just recently, we'd been able to demonstrate that 8214 was effective in animal models of fibrosis. We'd also been able to demonstrate in humans that we're able to block the CXCR4 receptor for extended periods of time after a single IV injection. The chart in the middle shows, for example, 100% blocking of the receptor for 1 week. But a common question from our partners has always been, well, how do you link that receptor occupancy with efficacy? How long are you going to need between doses? Can you really rely on this long receptor occupancy to support long windows between doses of 2 to 3 weeks? Well, the answer is we now have some really new in vitro studies to provide direct support for that proposition. We now know that we only need 60 to 85% blocking of the receptor in order to maximally inhibit a key mode of action of the drug. In other words, if you look at the chart in the middle, you can see that we're inhibiting the key mode of action for 2 to 3 weeks after a single IV injection of 8214. These levels of receptor occupancy can be readily achieved with low levels of circulating 8214. And what this means is that we now have, for the first time, direct support for the potential to dose 8214 intravenously no more than once every 2 weeks and still be efficacious. And this is a really important de-risking for the phase 2 clinical trial and for our partnering activity. So that brings us on to our upcoming milestones. 8214 is progressing through phase 1 extension study and into partnering conversations. We also have transaction opportunities around our iCAR-T programs. We're progressing our PET imaging program with GE, and we're continuing to invest in our iBody platform in order to ensure that we have continued competitive advantage to address these challenges where traditional monoclonal antibodies can't. And finally, we are closing out a capital raise right now. The shortfall on our recent rights offer has been covered. However, Peak Asset Management are still fielding inquiries from anyone who may be interested in participating in that shortfall. Thank you very much for your attention. We're really looking forward to the next 3 to 6 months with lots of news flow for AdAlta.
Thanks for the opportunity to speak with you today. BPH Energy has 3 main investment areas. That's in Advent Energy, clean hydrogen technologies, and cortical dynamics. I'll address each of those in turn. I'll now speak to the Advent Energy area in the first instance. Australia is in the midst of an energy crisis, and Advent Energy has its project, PEP 11, offshore New South Wales and 30 kilometres southeast of Newcastle. It has the capacity to solve the East Coast energy supply crisis, and I'm going to talk now more broadly about the crisis across Australia. If we look at where we are in Australia at the moment, you have, in fact, all of the power stations in Australia are due to be shut down in the next decade. What you have offshore in Australia is shown here in this slide, which is all the permits to the northwest of Australia, offshore Sydney, and down and offshore Victoria. Victoria is due to reduce its output by around 50% over the next 3 years, and that's part of the entire problem. When we look at across Australia now, you actually see that Snowy Hydro, which is a pumped hydro, won't be ready perhaps now for another 5 or 8 years. It's gone up from $2 billion in cost to perhaps $6 to at least $10 billion. So Liddell, New South Wales coal-fired power station has just closed, and we have 2 more power stations in New South Wales which are due to close before Snowy Hydro is now ready. So we have the wind farms offshore New South Wales coming in, and they won't start until the early 2030s. Blacktip offshore gas production has now got serious production issues, and that's caused the shutdown of the pipeline between the Northern Territory and the East Coast, which is part of the whole problem dynamic that we have in energy at the moment in Australia. Bayu-Undan is its output is rapidly declining. Beetaloo will take several more years in the onshore area to prepare for commercial production, and the new gas-fired generator in Wollongong will be ready at the end of 2023, and the source of gas is uncertain. We also have a further one being built, but it's under threat from activists. The lack of investment in oil and gas since 2016 continues to cause problems. In fact, if you look offshore and if you look what's happening in the offshore area, you've got 36 projects or 35 projects which are being held up for approval for drilling or development since May 2022. So not a single new rig has joined in to be able to produce more in the offshore area. And Australia, then the PEP 11 permit can be a real part of that solution. If we look at the map of permits in 2011 and then look again at what happened in 2022, you'll see that there's been a significant reduction in the number and type of producing permit areas or those permit areas available for future production. All of that leads to significant problems and cost blowouts and lack of supply, and that's leading to significant problems across the entire energy network in Australia. So now when we look at PEP 11, it has all of the attributes of other major producing basins overseas, and a potential resource of 5.7 TCF. You've got 2 gas-fired power stations, and they both need gas, and PEP 11 could be the source of that gas. In fact, if you look at New South Wales, it actually imports 98% of the gas that it requires from other states. And Victoria, of course, is due to reduce by around 43% or up to 50% in the coming years. So the offshore Sydney Basin has attributes that are similar to Ormond Lange, which is a 14 TCF field, and Gorgon, that is in the gas escape features and shelf slump events that are occurring in the area immediately offshore Newcastle. All of that means that you're seeing gas coming out of multiple areas right the way through the offshore New South Wales area. And our permit at Baleen and the drilling target at Baleen is the centre of that. When we look at fields all around the world, you see these types of pockmarks and chimneys that are associated with gas production. And in fact, if you look at the Gulf of Mexico, you'll see that there is a strong association between seeps and discoveries. And in fact, Schumacher said that 79% of wells drilled in positive anomalies, such as we have offshore PEP 11, result in commercial and gas discoveries. So hydrocarbon seeps are a key aspect of discoveries all around the world, and we have those in the areas offshore New South Wales. In fact, we have all of these major attributes shown in the seismic in the area where we're looking to drill. And when you look at the DGB Earth Science research in this on a global basis, you see that 94% of areas that have a non-fault seal trap, such as is indicated in the baleen area, then you have this 94% discovery. We have multiple attributes at depth at 2,000 meters, which is where the drill target is, and our drill target is around 20 square kilometers. This is a gas target, and as long ago as 1993, the researchers at that time determined that that was the case. You have a gas window area offshore in Pty Ltd. Let's just move quickly to clean hydrogen. It's in the turquoise hydrogen area. The objective of production is at $2 a kilogram, and that puts it on in the same area as the other turquoise hydrogen development projects around the world, including that which has been invested into by Bill Gates. When he visited Australia, he spoke with the Prime Minister and with the Minister for Energy, and convinced them that in fact turquoise hydrogen was one of the key areas of future development in the hydrogen development area. In our cortical dynamics investment, we are working with world leaders in the anesthesia monitoring device, which looks at the EEG of the patient whilst they're in anesthesia and undergoing operations. In addition, we have an agreement with Philips, and this technology is now going through a significant upgrade of its technical attributes. If we look at what's occurring now, going back to the energy area, the ABC today said that the sting in the tail of Australia's energy crisis is power prices are now going up to 100% up for certain customers, and that's despite $3 billion of combined assistance from state and federal governments. And so we really are in an energy crisis, and we can in fact offer a potential solution to that. Thank you for the opportunity to speak.
Hi everyone, my name is Adam Brimo, and I'm the founder and CEO of Open Learning Limited. Open Learning is an AI-powered lifelong learning platform that operates on a B2B SaaS model in Australia, Southeast Asia, and around the world. We have over 3.4 million learners on the platform and 225 customers. These are education providers such as universities, colleges, organizations, and government agencies. At the end of the first quarter, our SaaS ARR was 1.79 million and growing at a rate of just under 20% year on year. I founded the company in 2012, and in the past 10 years, we've grown from being a lifelong learning platform in Sydney to expanding across the world. And the past couple of years, we've been really excited to start working with the Education Centre of Australia. And completing our strategic review last year, we've really focused on growing our SaaS platform. Now, what's really exciting is in the past few months, we've already rolled out a whole suite of embedded generative AI tools on Open Learning, and Open Learning is now becoming an AI-powered platform. On top of that, we're expanding into India in partnership with ECA, and we have a lot of growth opportunities ahead of us in Australia, Malaysia, and existing markets. What Open Learning is providing to education providers is a fully integrated all-in-one platform for them to deliver world-class lifelong learning. This includes all the functionality to handle e-commerce and payments, AI-powered content authoring, learning delivery, so facilitation, content authoring, creating activities, projects, assignments, all the assessment tools for handling marketing and facilitation. We also have built-in digital credentialing, which enables organizations to issue badges, certificates, and micro-credentials through the platform. And we also have a portfolio system, so that everyone who completes a course on Open Learning leaves not just with a certificate, but also a portfolio of all the skills and everything they've learned in their courses, which they can then take to employers to help get them a job or ask for a promotion. So Open Learning's end-to-end lifelong learning platform actually makes it very easy for education providers to launch and build an online education business. Prior to using Open Learning, they would have to integrate multiple systems together and purchase multiple tools at a substantial cost. So Open Learning is both cheaper, easier, and enables them to go to market faster. And now we have built-in generative AI to make the course design and authoring process even more efficient. Now, we are leveraging technology at scale at Open Learning. Over the past few years, we've grown at a rate of about 19% year on year, and our average revenue per customer grew by 36% in the first quarter of this year to over $7,948 per customer. This is SaaS revenue. On top of that, we're seeing great operating leverage throughout the business. We've actually brought down our hosting costs by 50% since 2021. And we're working closely with all of our partners to both increase their usage of the platform and to acquire new customers. So we're focusing on platform SaaS, and that's led to robust ARR growth, even amidst cost reductions that we've undertaken in the past 12 months to try and get the company closer to break even in the coming years. So we're demonstrating our ability to leverage technology at scale. Now, what's really exciting now and in the future is that AI is a game changer for education technology, and Open Learning is one of the leading platforms in this field. We were actually the first to market in Australia and Southeast Asia with our AI-powered content authoring tools. Now, this is a real game changer because the biggest challenge education providers face when moving online is actually building their courses and building content. So if you're building a short course or micro-credential or online degree, each individual course could cost a university $5,000 to $30,000, for example, and take weeks or months to build manually. Now, our AI tools powered by GPT-4 from Microsoft Azure will enable educators to build courses 10 or even 20 times faster by generating the first, second, even final draft of the content for their course. Now, we've already embedded this into the platform, and it delivers far superior results to using ChatGPT. And one of the reasons for that is because we've actually fine-tuned the prompts and the models to enable our educators to design courses that implement best practices in online education. We have clear policies on data ownership. The content generated is owned by the educator. They're responsible for it. They're checking it over. They're not just giving this directly to students without checking it all. And on top of that, we have higher limits than in the platform than you can access on ChatGPT. So this is not just a thin wrapper on top of ChatGPT. This is actually using the underlying GPT-4 libraries, embedding them into Open Learning, and generating really subject-specific, domain-specific content for the use cases that the educators have. Now, Open Learning is already first to market, and we're moving fast. This is a very fast-moving field, and it's very challenging to stay in front, but we are focused on being one of the leaders. So we're developing a complete suite of embedded generative AI tools for educators, and we've got a full release pipeline planned for the next 18 months. Already, we've launched our activity creation tools using best practices in online learning and learning design. Next, we already launched our content generation tools, so you can generate all types of content from case studies to problem-solving activities, how-tos, pros and cons, glossaries, and much, much more. But we're not stopping there. We're also building out tools to generate module structure, activity structure. Pretty much you'll be able to generate an entire course on Open Learning, from the learning outcomes through to the content. And when that's done, we'll be working on facilitation tools and assessment tools. So we'll enable education providers to actually use these tools to build and deliver their courses. And the key here is that we're focused on education providers, improving efficiency of education providers using AI. We're not selling these tools to students. We're not giving them to students. The focus is on education providers who are our software as a service customers. Now, we're doing this all around the world, but we're really focused on a few key markets. Open Learning already has a strong presence in Australia, Malaysia. We've been expanding into Indonesia, but now this year we're expanding into India. And we're doing so in partnership with the Education Centre of Australia, one of Australia's leading education providers that already works with a huge number of universities and students across India and subcontinent and supports students' recruitment for many universities across Australia. So they're our partner in India, and they're also one of our strategic investors. And we're really excited to work with them to tap into the fast-growing Indian market, where we're launching Open Learning as a SaaS platform for education providers and a marketplace for short courses, micro-credentials, and online degrees. We already have a number of courses available in Open Learning India, and we're growing quickly. So we're really focused on expanding this over the next 18 months and beyond. Looking ahead, our focus in the next 18 months is really to grow the core platform SaaS business in Australia and Southeast Asia, and then focus on launching the business into India, where we actually are working very closely with ECA and a number of other resellers. And with them, we'll be growing our marketplace for short courses, micro-credentials, and online degrees. Now, while doing all of this, we're focused on controlling costs and improving our gross margins, as we've already done for the past 2 years. Now, we're launching a whole suite of embedded AI tools for content authoring into the platform, and we're expanding these tools in a whole range of areas so that you can end up building an entire course using AI and open learning and providing the tools to educators to facilitate, assess, and mark students in that course. So we're really excited for what's to come, and we think open learning is extremely well positioned to capitalize on the trend of generative AI in education technology, and also on expanding into new markets in a capital light way with our partner ECA in India. So thank you very much for your time, and I look forward to answering any questions or speaking with anyone who's interested to find out more on the company. Thank you very much.
Hi and good morning everyone, it's Dr. Mike Jones here. I'm the Managing Director of Impact Minerals Limited. We are a development company looking to get our Lake Hope High Purity Alumina project into production over the next few years. And we've recently acquired this project, and hence we're the new player in the HPA space, high purity alumina. So we'd like to come with us on this journey because we think over the next few years, we are going to aim to become one of the lowest cost producers of high purity alumina. We've got a unique deposit here in Western Australia, about 550 kilometres east of Perth. It's a tier 1 jurisdiction, and it's one of the best places to invest anywhere in the world. As well as a unique deposit, we've also got a very cost disruptive metallurgical process, and we're now in a pre-feasibility study on this project, looking to see what the economics will look like over the next couple of years. And over that time frame, we're also going to build out our capabilities in metallurgy and our final product specification, which for those of you who follow the HPA space, this is an important part of the entire marketing process. And we believe that we can deliver over the next few years into a high margin, a growth market with significant upside potential. And there's actually a supply deficit forecast in 2026, which is about when we hope to get into reasonable production. So what is high purity alumina? Look, it's used in two main markets. It's used in the LED sector, in light globes, and increasingly micro LED screens in particular. And there's an annual growth rate of about 20% predicted over the next decade. One of the big areas, of course, is in lithium batteries, and HPA is used as a coating to separate the anode and the cathode and keep the batteries from exploding. And if many of you remember the Samsung phones that were exploding a few years ago, that's because the separators weren't doing their job. And of course, with the massive increase in lithium battery demand forecast over the next decade, and there's an annual growth rate here predicted of about 50%, which is huge. This is why we're going to be looking at a supply deficit somewhere in 2026. So look, big demand for this very unique and niche material. Because it's niche, it is actually worth a lot of money. And so the amount that you can charge for the product does depend on the purity. And the benchmark is generally taken at 99.99% aluminium oxide, or Al2O3. And the benchmark price is in the region of about $15,000 to $25,000 a ton. Now, that sounds a lot, but you can clearly see that there are different grades. And so less pure material goes for between $5,000 and $15,000. And the high grade material is very expensive at $25,000 plus a ton. However, the markets for those are relatively small. So the benchmark we take is for 4N, or 99.99%, is about $20,000 a ton. So what does that make of our Lake Hope project? Well, Lake Hope is a player lake, hence the pun in the first slide. It's a salt lake here in Western Australia, and it contains mud. And in the top 2 meters of that lake, we have about 3.5 million tons, carrying about 25%, or 1/4 of the material is aluminium oxide. And so we just recently released our resource, our maiden resource for the area, and it contains about 880,000 tons of alumina, or aluminium oxide. And we believe that most of that will be able to be converted into high purity alumina. So if you do the multiplication, you'll see that there's many billions of dollars worth of value locked in the upper 2 meters of that lake. So the lake is quite amazing, really, because I believe it'll probably be the shallowest, highest grade open pit anywhere. It's high grade. We've got 25% alumina. It's very soft. It's shallow, cheap, free digging. You can see a picture of me here walking across the surface of the lake. There's some very unique minerals there. So as a result, there's no pre-stripping, no selective mining. Our plan is to basically just dig up this material and ship it off-site to an industrial facility somewhere in Western Australia. So it's in essence, it's direct shipping ore. We're going to leave behind a very tiny environmental footprint, a hole only a metre or two deep on the surface of the lake, which will fill up over time. The lake surface is basically biologically sterile, and we're going to have very low carbon emissions and limited rehabilitation requirements. So overall, it's a very unique deposit. So to go along with that, the nature of the minerals in the lake bed allow us to use a disruptive metallurgical process. And this graph here is a cost curve for the production of HPA. And we believe that the incumbents in the industry at the moment are sort of selling HPA, depending on the nature of the product, at somewhere between $15,000 and $20,000 per tonne. So we believe that our process will be one of the cheapest production capabilities of HPA anywhere in the world. You'll see in there that we've got, there's a drop in the cost curve there, and two ASX codes there, A4N and FYI. They're both in the HPA space. And A4N, or alpha HPA, is a prime example of what happens if you can get this right in the HPA space. And if we look at the market cap of alpha HPA over the last 4 years, it's gone from about 10 to 15 million up to 950 million recently, as the market has really understood the profit margins and the scope for alpha HPA to expand into the high purity alumina space. And we aim to follow in their footsteps. And so where we sit at the moment, our market cap is about 35 million. This is our share price over the last year. And you can see that since January, we've basically almost doubled in price, or more than doubled in price. Part of that has been driven by the fact that we're part of the first cohort in the BHP Explore program, which some of you might have heard about. And we'll have results coming from that as well over the next few months. But the market cap is sitting at about 35 million at the moment. So plenty of room to grow over the next few years as we develop the Lake Hope project and enter the HPA space. So going forward, some immediate catalysts. We've just recently released our maiden resource. We'll be releasing a scoping study in July or August. The PFS is well underway. We'll also be lodging a mining lease application very shortly. And the aim is to get some marketing samples from our metallurgical test work, get that in front of customers, and look to expand sign-off-take agreements in 24, 25, and progressively build the plant, and looking to get into larger scale production in 2026, which, as I say, is the forecast period of supply deficit for high purity alumina. So look, it's a very exciting story. It's a very exciting project, and I'd encourage you to take a look at our website, get involved in our investor hub, where you can engage with me directly via a chat room, and we look forward to any questions, and please contact me if you do. Thanks very much.
Hi everyone, my name is Jari Kinnamoth and I'm the Managing Director of Future Metals. Future Metals is progressing the Panton Platinum Group Metals project in the East Kimberley in Western Australia. It's one of the most mature and high-grade PGM deposits in Australia. And we're also looking to make a significant nickel sulfide discovery next to that existing deposit, and we are currently drilling as we speak. Just pausing there to note the disclaimer, and you know, clearly any investor looking to invest in Future Metals should do their own due diligence before making that decision. So as I said, we are progressing the Panton PGM project through development and into production. What we're looking at is a long life, low capital and high grade operation. And we're looking to deliver a scoping study outlining the framework for taking that project forward in Q4 of this year. it is going to be a low capital operation because it is such high grade. It's one of the highest grade undeveloped PGM projects globally, and certainly the highest grade in Australia. So that allows us to take a low capital approach, and similarly, its location is highly beneficial for that. It's located next to all the requisite infrastructure up in the East Kimberley there for progressing a project of this scale. Location is another, is an important point to touch on at a more macro level. The majority of PGM supply does come from Russia and South Africa, clearly two challenged investment and operating jurisdictions relative to Western Australia. So there is significant strategic value in our Panton deposit there as well because of that. Metallurgy is a big focus for PGM projects, and we've had the benefit of a raft of work behind us to basically craft a highly economic flow sheet that looks at producing a bulk nickel and PGM concentrate for sale to smelters, or alternatively we can process that further ourselves using hydrometallurgical processing techniques to produce very high grade semi-refined PGM and base metal products for direct sale to customers. And that has the benefit of having higher payabilities and a relatively lower emissions footprint than sending it into the smelting market. On top of that, we're also looking at potential tailings leaching through that flow sheet. And again, that will produce semi-refined high-grade PGM products for direct sale to refiners. And lastly, we have a very chrome-rich deposit at Panton. So there's a lot of chrome associated with the nickel and PGM. And what that allows us to do is look at producing a high-value chromite concentrate for sale into the ferrochrome industry as well. So you can see there we are extracting the maximum amount of revenue per tonne of ore that we're pulling out of the ground that we can. And to add to that, mature flow sheet that we have developed, we are in a great place to progress the project forward at an accelerated pace, given all of the prior work of prior owners. When we acquired the project, there was a significant amount of drilling, a significant amount of study work, and there was also a decline already developed into the ore body, down about 100 meters below surface and circa 450 meters of development. What that allows us to do is potentially look at opening that decline, doing bulk metallurgical test work to support an accelerated bankable feasibility study, and ultimately bring the project into production much faster than any of our peer undeveloped projects out there. It's worth noting there as well that we are sitting on granted mining leases. So just want to touch a bit more on the PGM market. PGMs are primarily used in catalytic converters, as well as a raft of other niche users, as well as jewelry. But one of the key growth markets for platinum and palladium is in the hydrogen industry. It's a key input into hydrogen electrolyzers and fuel cell electric vehicles, and demand is expected to grow significantly on the back of the amount of investment that is flowing into that sector on the back of the Inflation Reduction Act out of the US and the EU's Green Industrial Plan. So there's a big increase in demand out of that sector for PGMs coming, and certainly analysts are predicting that platinum in particular is going to go from its levels of circa $900 an ounce to up to $1,500 an ounce by the end of the year. And to add to that, in terms of tailwinds at a macro level, the supply side is incredibly shaky. So 80% of the world's platinum and palladium comes from Russia and South Africa. All of that Russian supply is basically going through China, which leaves South Africa as the lead supplier for Western consumers, and it is a very challenged operating jurisdiction. It's only recently come out of a state of emergency due to the rolling power blackouts that were occurring there. And certainly a few months ago, we had all the major PGM operators there saying that the conditions were untenable for their operations, and certainly it's crueling any ability to make further investment decisions into that jurisdiction. To add to that, PGMs are an incredibly rare metal. They're about 10 times more scarce than gold. They're certainly a lot more rare than rare earths or lithium and copper, where we're obviously seeing discoveries being made every second week. That's just not the case with PGMs. So what we have at Panton is incredibly valuable in that it is the highest grade or one of the highest grade undeveloped PGM projects globally, and it sits in Western Australia. So that's a huge inherent real value there. So to add to the value of the PGM deposit that we're progressing the scoping study on, we're also looking to extract more value out of our significant land holding through attempting to make a significant nickel sulfide discovery to complement that existing PGM deposit. The reason that we're undertaking this exploration work is because of the compelling historical results that we've uncovered over the past year, including intercepts of 4 meters at 1.2% nickel, 1% copper, and 2 grams gold, which sits outside of that existing resource in a totally different type of mineralization. Intercepts like that give us confidence that this area and land package that we sit on has been subject to multiple magma pulses and generated multiple styles of deposits. I guess what gives us further confidence is the amount of work that the nickel and lithium major IGO is doing in the same region. They've picked up a lot of land in the East Kimberley and West Kimberley and are out there looking to make a discovery as well, because they know what we know in that it's a highly fertile ground for further discovery. And this exploration model is supported by an expert in this style of geology, and that is John Hronsky. So we've got an incredibly strong team pushing forward the nickel sulfide exploration aspect of our business. So in terms of what we have coming up, as I say, we are drilling out at site currently, looking to make that next nickel sulfide discovery, and results from that drilling will be coming out through July and August. We'll follow that up with a detailed geological and soil sampling exercise over some other prospective areas. And then based on the results from that drilling and the mapping, we'll make a further decision on follow-up exploration work into the back of Q3 and through Q4 there. Currently, we're looking at wrapping up a new JORC resource model, which will then allow us to wrap around our mine design and flow sheet design work to deliver on that scoping study in Q4. And parallel to that, we've got a number of flow sheet optimization and variability testing programs underway across the various unit operations that make up our flow sheet. That's it from me. Thanks for taking the time to listen, and please reach out if you would like to have any questions answered or arrange a call.
Good morning. My name is Shannon Bamforth, and I'm the Managing Director for Codrus Minerals. We're an exciting rare earth exploration company that's got lots of opportunities ahead of us. So who are Codrus Minerals? There's myself, Shannon Bamforth, a geologist, Andrew Radonjic, also a geologist, as the Executive Chairman, and Jamie Bird, who's our Non-Exec Director and Company Secretary. We listed in June 2021, so we're just on 2 years old. Our capital structure is very tight, 75 million shares on issue. 35 of those are held by our substantial holder of Blackstone Minerals. And I guess the interesting thing to see in the graph is where we saw that inflection point at the back end of 2022 and the high volumes of shares starting to trade. That's when we saw the introduction of our Carloning Rare Earth project. And that's really had the market interested in us. And we've had a little bit of a roller coaster of a share price. But when we get information out there, there is a lot of interest. We just need to see that sustained buying. So the Carloning Rare Earths opportunity. So Carloning is about a 3.5-hour drive out of Perth in the wheat belt of Western Australia. And what we've been able to discover out of Carloning is, one, we've got a pegmatite that's got rare earth mineralisation with a little bit of niobium. But really importantly, we've been able to step off the outcrop and go down into the paddocks and find really good grade, continuous rare earth clay mineralisation. As a location, you couldn't be any better in terms of infrastructure. We've got sealed roads to within 600 metres of where we've got the drill rigs. We've got power on mains power, and we've got water that's reticulated by the Shire into the property. So we are in a wonderful location and only 3.5 hours out of Perth. Our maiden drilling program was just completed, and that covered 1,906 metres of RC drilling. Excitingly, in this drilling, out of the 11 holes that we drilled with mineralisation, it was really continuous and consistent in its grade. So it's just a fantastic start to the project. And to have 11 of the drill holes come through with mineralisation out of 13 that were drilled, we were really excited by it. And I think it really underpins the opportunity in this project. Interestingly, we've never seen exploration for rare earths in this part of the wheat belt. So this is a real first mover advantage, and we've got a lot of opportunity with us and quite a lot of ground to explore. What we see at Carloning is the granite underneath us is being weathered. And then in that profile where we see the clays and the saprolites, we see the concentration of the rare earths, almost like a supergene gold mineralisation. It's just enriched. And we have really consistent widths at good grades in all of the drill holes. The only two that didn't hit clay mineralisation were drilled at the very north of the project, right up against that tree line, which is essentially fresh outcropping granite, where we haven't had the clays develop. So at Carloning, where are we? So we're looking at increasing our land holding there. We've got new tenements that have been pegged, and we're just waiting for those to be granted by the department. And we're also in negotiations with local landholders and tenement holders to expand our footprint. We'll be commencing leach test work on the sampling that we've done to date, where we had those really nice grades come through. And we're planning for follow-up work to really have a look and expand the scale and scope of this project. So where you can see the little blue circle on the slide, that's the area where we drilled. Outside of that area, we have a massive opportunity to expand our footprint. And you can see that highlighted in yellow. And to the other side of the vegetation to the northeast, also opportunity there. On the little section you can see at the bottom of the slide, what we can see is the higher grades of the rare earths in red, in that clay zone. And then as we get down into the fresh rock, we're drilling into 100+ metres of granite that is all uniformly mineralised at plus 500, 600 ppm. So we've got a really continuous granite that's really amazingly homogeneous in the way it's mineralised. So we think that bodes really well for the ability for this to continue out from where we've drilled and to be able to really expand our footprint in terms of where we have rare earth mineralisation. And this is a key part in getting us towards building a resource for this project. Other projects in the company, in Western Australia, we have the Middle Creek project up in Nullagine. That's a gold project, really exciting. Never drilled, even though it's right in the vicinity of existing gold projects. And we've been able to find outcropping gold in little veins. So we're really keen to get up there and do some drilling once we get some support back around the gold exploration space. At Red Gate, 140 kilometres north of Kalgoorlie. Our initial drilling in there saw great results, circa plus 20 metres at just on 4 grams a tonne. We've been able to understand geologically what's going on there and being able to get gold over 800 metres of strike. So I think that's another really exciting project for us. Silver Swan, 40 kilometres north of Kalgoorlie, another fantastic project. And what we have there is the ability for gold and nickel to be discovered. We're in the land of giants there, and we're discussing potentially joint venturing that project out at the current time. And then over in the US, we've got Bull Run. And Bull Run is a fantastic opportunity for us. What we have there is we think it's an epithermal sitting in front of a big porphyry copper opportunity that it's held by Ivanhoe Electric, run by Robert Friedland. And we think we're sitting on the high-grade epithermals at the front with the opportunity for gold, copper and molybdenum. It's been mined historically for over 100 years as very high-grade quartz veins with no real modern exploration. So we're looking forward to getting moving over there as soon as we get our permits with the Forest Service. So in summary, the Critical Minerals Work Program is Carloning and working through getting our next phase of drilling underway at the end of July. And then we're also always open to the opportunity to add more projects on that critical minerals side of our ledger, and then start to balance that off against our gold programs and projects. So the key takeaways: one, we've got rare earths, and we've got the right rare earths. We've got good concentrations of the 4 rare earths that go into our permanent magnets. So they're about 21% of our total rare earths. That's a really good ratio. We've got a fairly aggressive exploration work program planned for the back end of the year. We're getting exposure to these really strategic commodities if you're an investor in Codrus. And central to many of the decarbonisation efforts, the rare earth space is really going to be a acceleratingly, interestingly placed space in the next couple of years. And with such a small market cap, we're highly leveraged to exploration with such a tight capital structure as well.
Hello, I'm Sean Delaney, the Managing Director of Olympia Metals. I'm just going to run you through the Olympia Metals story today, the critical minerals explorer in Australia. So Olympia Metals is only about one year old into our exploration journey. So we floated with two assets, the Mawari lithium project in Western Australia, just north of Kalgoorlie, and the Halls Creek Gold project in the East Kimberley of Western Australia. About last November, we acquired the Olympia rare earths project in South Australia, which is a very exciting project. It's about 3.5 hours north of Adelaide. So great location, great prospectivity there for rare earths. Just quickly on the corporate structure, very tight corporate structure, 54 million shares on issue, has raised 6 million in our IPO just over a year ago. That's 3.2 million cash at the end of last quarter. So the board, Simon Andrews, the chairman, Aidan Patel, who runs Charger, a lithium exploration company, he's non-exec, and myself, MD. I've been in the mining industry for, I guess, over 30 years. I started out as a driller in the Kalgoorlie region of Western Australia, in the early 90s, but I converted to accounting since that time. So this is the Olympia project in South Australia. So great location, as I mentioned, about 3.5 hours north of Adelaide, 100 kilometres, approximately east of Port Augusta. It's really positioned on some deep crustal structures, the G2 structure, that which also hosts Olympic Dam. So very important for the geology, I guess. Just the fact that there's very deep plumbing in the system there, and tier 1 location, easy access to ports and rail. So we completed an agreement to acquire the Olympia project in November last year, and the Olympia projects this central tenement here on the map. So it's a very interesting area, but it's been a diamond exploration target for many years, explored by Flinders Diamonds and Stockdale, and never really any focus on rare earths. But when we acquired the project as an earn-in with a private company over 3 years, we pegged this ground to the south, which we were astonished, I guess, that it was still vacant. It hosts the Wallaway carbonatite on the boundary of the tenement. And it's just one of the sort of 8 known carbonatites, I guess, in Australia, been known about for 50 years, but never been drilled. I guess, given the fact that this ground was held by diamond explorers over many years. So, and we recently pegged another application to the north, just all running along the G2 structure with another known carbonatite on the project. So, yeah, what we're chasing here, I guess, are carbonatite hosted rare earths. So very exciting project. So the Olympia project, that had several hundred trenches, I guess, completed by the diamond explorers. We were lucky enough to find a couple of hundred samples stored in Adelaide in a house there, and we assayed those samples and got up to 1% TREO. So I guess we've identified sort of 10 kilometers of strike that's really only had one historic hole drilled and assayed for rare earths, and the trend running down into the Wallaway project to the south. The Wallaway tenement to the south has just been granted, so that's it means that we can get on there and put some holes into some very exciting magnetic targets that we've got there. We just completed a drilling program, our first reconnaissance aircore program on the Aurelia project, and the results of that will be released to the market very soon. So looking forward to those results, looking forward to getting on the ground on the Wallaway project once our drilling approvals have been granted, which is ongoing. So this is just, I guess, a quick description of carbonatites. Mount Weld is a carbonatite hosted in a kimberlite field, the best rare earths mine in Australia. Mountain Pass in California, which I guess is perhaps more similar to what the potential or what Wallaway could be. Carbonatite hosted rare earths are really, I guess, where we think the most excitement is in the rare earths market. So just moving to the Wallaway, or to the Marwari project rather, in Western Australia. It's 120 kilometers northwest of Kalgoorlie. So yeah, as I mentioned, northwest Kalgoorlie, famous mining centre. So this slide here, I guess, is the Yilgarn region of Western Australia, the southwest. So it's really just for it's a simplistic sort of geology map, I guess. But the important part about it is that the pinks throughout here are granites, and the greenstones, and all the deposits that have been discovered. You've got Kathleen Valley, which is Liontown. They're constructing their lithium project there. Mount Ida, which is Delta Lithium, just to the north of us. All these projects have been discovered in the greenstones on the edge of the granites. So that's really sort of the ideal positioning in geology for discovery of a lithium resource in this region. So this is a close-up of our Marwari project, and you can see this these red squares of our tenements here. But in the greenstones on the edge of the granites, just to the south of Delta's Mount Ida lithium resource. We started talking to Liontown several months ago, and we announced in April an agreement for Liontown to complete a farm-in on our Marwari project, which we're very excited about, given obviously the quality of the company, significant company, building a multi-billion-dollar market cap, building the Kathleen Valley lithium project. So using their expertise and their resources. So they're completing soil samples on that ground right now as we speak to make a decision whether to proceed to the first stage of the farm-in. So yeah, look, we think it's a great result. We get the option to stay in after stage one at 49% of the project and contribute our share if they decide to proceed and make a discovery. So I think it's a great outcome for the shareholders of Olympia. So the Halls Creek project, as I mentioned, the East Kimberley region of Western Australia. So we won't spend too much time on the Halls Creek project, I guess, just due to the time available. But very interesting geology in this region. It's a very exciting project. We really like the gold prospectivity. We're on the eastern side of the highway. 6 sort of separate projects. We're planning to do some drilling there very soon. We've got all approvals in place. And yeah, this is an underexplored region. The geology is fantastic. So it's like to say, if these sort of projects or these quality of projects were in the Kalgoorlie region, they would be like Swiss cheese in terms of drilling, but it's really an underexplored area, but good possibilities there. So that's just, I guess, a quick summary of Olympia Metals. A very tight capital structure, as I mentioned. Our major shareholder holding 18% is Lithium Royalty Corporation out of North America. We have another institution, Atlas Capital Markets, holding 9%. So we've got 27% held by 2 institutions, which is just really important, I guess. Tight capital structure, good strong register for a junior explorer. News flow with Liontown doing our exploration. Lithium exploration at Marwari, and we are doing rare earth exploration at Aurelia and Wallaway. So really, I think it's a great position to be in, because Liontown are looking after the lithium. We're focusing on the rare earths. So that's summary of Olympia. If you need any more information, my contact details are on the screen, please feel free to get in touch. And thank you very much for your time today.
Hello everyone, my name is Chris Gibbs. I'm the CEO and Managing Director for American Rare Earths. I'm excited here today to share our story and the opportunity here regarding our assets and what we're doing at this great company. Prior to talking though, I will however draw your attention to the disclaimer slide. American Rare Earths, we're an exploration company. We're listed on the Australian Stock Exchange, but we're in the right place at the right time and with the right commodity. American Rare Earths, we are the only successful Australian explorer with a world-class asset in the United States. This is a significant deposit. We've got a rare earth deposit that's got 1.43 billion tonne JORC resource, and that contains over 4 million tonnes of total rare earth oxides and over 1 million tonnes of the highly valuable neodymium and praseodymium. Now, this deposit, it could not be more strategically significant for the United States. It could actually be larger than the only other rare earth mine currently in the United States, and that's the Mountain Pass mine in California. And the United States, it's the largest economy in the world, and they are desperately seeking to onshore rare earths, and priority will be given to domestic suppliers. Currently, today, around 85% of rare earths, these magnetic rare earths, are actually produced in China. And that's the opportunity for American Rare Earths being in the right place at the right time. The US desperately needs these rare earths. American Rare Earths, we're well funded. We have currently around just over $13 million of cash in the bank and a number of other financial assets. And that includes a promissory note and also a $3 million promissory note, and also shares in Cobalt Blue. Major shareholders are the Hill family group and also Fidelity International. Key projects. I'd like to talk really here, in terms of a key project, is the Halleck Creek project in Wyoming, but we've also got the La Paz project in Arizona and also a project in Nevada. As our namesake says, we're American Rare Earths, but this Halleck Creek project is a significant deposit. As I outlined earlier, it has a JORC resource of 1.43 billion tonnes, and we are advancing this project at a rapid pace. This project, we only announced that JORC resource earlier this year. We are conducting further drilling on the ground very shortly, and we're also midway through metallurgical test work, and that metallurgical test work has proved very successful to date. This ore responds well. It contains over 26% of these highly valuable magnetic rare earths, and we're very excited with how this has worked out so far. And a conventional flow sheet is what has been shown to prove successful here. So the project is moving forward at a rapid pace, and our next steps are to also prove out some of the economics, and that's some of the catalysts going forward. American Rare Earths is an exploration company that's focused on exploring and developing projects that are focused on these rare earths: neodymium, praseodymium, dysprosium, and terbium. These are what are called magnetic rare earths. And one of the largest problems today is that you can't get enough of these magnetic rare earths. Currently, 85%, as I said before, are processed in China. So the challenge is where to get these magnetic rare earths. They're required for us in everything from our electric vehicles through to wind turbines, and for national defense purposes, and for everything even down to our cell phones and our computers. And anything that requires motion requires magnets. And we hear a lot about lithium, because that's what's required for batteries, but you need to power things. And so that's where the magnets come in. And so the largest problem facing us today is to where to source these magnets and these metals required for this industry. And so for American Rare Earths, that's our focus. And for Halleck Creek project is really the solution within the United States. In terms of creating value, our focus here is around advancing this massive project in Wyoming, the Halleck Creek project. That, as I outlined before, has the opportunity to be the largest rare earth deposit in the United States. Now, the other thing which a lot of people don't know about us, we are also the only exploration company that are a member of the US Critical Materials Institute. Now, what this means is we are currently collaborating with a number of US R&D funded programs who are looking at new clean and green ways to process rare earths. Now, this Halleck Creek project, why the researchers are interested in us is because this Halleck Creek project is low in thorium and uranium, which is so often found at rare earth deposits. So, this is exciting, that we're involved in this research, and that could be truly transformational for the industry and not just for American Rare Earths. The other thing for us is that as an exploration company, we're in the land game, and so we're also actively exploring right up through Wyoming, through Idaho and Montana for also those next major rare earth deposits. And I believe there's a number of other rare earth deposits within the United States. And as an exploration company, we have a team on the ground and we're actively seeking to explore those. And as our namesake says, we are American Rare Earths. We're currently listed on the Australian Exchange. However, we are also dual listed on the OTC markets, but we are uplisting our listing to the top tier of the OTC markets. And that will happen over the next coming weeks. We're working with BNY Mellon for American depository receipts, and then we'll be listed on the top tier of the OTC. Later this year, we are also listing on the NASDAQ. And this is part of our push to move forward and transform the company to being a US-based company and to really attract those major investors in the United States. Now, that's good news for our Australian investors because obviously we believe that will be truly transformational for the company. We think great things lay ahead. It's about advancing the Halleck Creek project, continuing our focus on these R&D programs within the United States and continuing our transformation program to be fully based within the US. And for us, it's about being in the right place at the right time and with the right